Hey everyone, welcome back to the channel. I'm Doug the Retirement Guy. We have our weekly review of the Roundhill Weekly Dividends. All 22 of them. We're going to give you guys the hot updates, all the information. We're going to give you the total return, and we're also going to issue our Cash Cow Award, who's given us the most income for the week. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. And if you're looking for financial information, always contact a licensed financial advisor. This is for informational and educational purposes only. So when we take a look at this week's, the weekly pay ETFs, the growth rate, man, I'll tell you what, it don't look pretty. It looks kind of sick and kind of horrible this week. If you look at everything, it's been down in the past week. We have some 30 days starting to pop up. We have some year-to-dates that are still holding strong. But we try to give you the information that is accurate as much as we can. We have now, all of these sheets are now directly tied into the Google Finance, so they can update us on a regular basis. So kind of give you more of closer to the bottom line answers and to the exact numbers that we can get. So we take a look at these. As we go down, you can see the big winner at the top was the Apple, up 4.78%. It's put into the 30-day growth now at 10.79. Still down for the year 22, but definitely well above its 4-week average. So out of all this soup, out of all these different funds, we can't look at every single one of them, but what I want to do is really dial into a few select ones that I think are just really things that you got to look at. Number one is going to be the coin, the weekly pay from coin, COIW. I look at this one. This one dropped 13.57%. So first off, you want to say this thing's dropping, it's going crazy, it's going out, get out of it. Totally wrong. What's happening here is we're starting to get a little more volatility back into coin. So what happens here is the price and the value of this ETF has gone down because they've had to sell some of their shares. They've had to sell some stuff off because of the volatility. I'll say they weren't prepared for the volatility. They couldn't change things quick enough, and they had a huge drop off. So this one I think is turning into a nice big cash buy at $2 below the 4-week average. I just think right now that this is an area to, if you have extra cash, is to buy into. I think it's just something that you guys are going to be pleased with. Just give it a few weeks and you'll be very pleased that that thing comes right back. Number two, Google. I've told you this. Google was on an up run. Google was on a starting to good run, and they did. And then this week, for some reason, they've had a drop off of what's going on. I don't know if it's the, kind of people talking about the AI's pulling back, but we are going into the tough times of the end of September, early October. We always have struggles in October. So could be their pullback from it. I just look at this now. It's not to the 4-week average. It's basically about $1.20 above it. But I still think it's a great buy at that $60 price point. So it's really one of those things that I want to keep an eye on. I don't believe Google is going to drop much or shouldn't drop much. And we've had a strong year to date. I think it's still got a lot of legs to run. The other one, and this one here, guys, I'll tell you what, it is a little bit of a roller coaster, but I love this roller coaster, and that is HOOW, the Robinhood Fund. This thing's down to $69.81. The 4-week average is 66. I do this to tell you, keep an eye onto it. I'm not saying right now is a great time to buy it. I'd put more money into the coin before I'd put more money into HOOW, but I would watch it for this week. If this thing seems that it gets down to that 4-week average, jump in and buy some more, because that is how Robinhood runs. It rockets up to around the mid-70 price point, and then it comes back down to the mid-60s, and then bounces right back up. But what you have is a long haul, 30-day, year-to-date, all over 14 and 32%. I just see as this down as a possibility to buy a couple things or to pick up some shares. But I'm going to keep an eye onto it. I think it's back down to that 65 range. Probably going to jump in hard. So those are just three of them that I wanted to really make sure people understood on this growth thing. It's we're not buying just on the low. What we're watching is the average. It's starting to get close to that 4-week average, and it's starting to make a major play. We look at the income, the weekly income ones. These guys are the steady players. These are the guys that just come in, week out. We look at this. YBTC is down 6%. YETH down 14%. That's well below its 4-week average. MEGY right par what it's been doing, tied with its 4-week average. And that's how you look at this stuff. What's the 4-week average? What's the current price? And so that YETH definitely, you can see a lot of AI stuff dropping. You see the Bitcoin's having a little bit of a drop to it. So I just look at these things and say, hey, is it a good buy? Is it not a good buy? But this is only one step of doing this, and that is the growth. What I want to look at is what we get from dividends, return on investment, and then also what the dividend compare package is. So we'll continue on with more information. Nothing here really too exciting, as these guys are I call them the boring stocks. They just pump out week in, week out, and they're pretty flat. Let's get into the dividends. We'll start off with the big announcement was HOOW is going to pay out $2.22. That is phenomenal. It's like its second largest payout this week coming up. So you can still buy that today. If you buy today, you're still going to get the $2.22 dividend. That is huge. We then take number 2 is COIW. Again, I think personally this week, my pick of a really strong one, $1.33, almost $1.34. Big increase, almost double what it did from last week. Number 3 is PLTW at $1.10. Another strong one. You can see that the volatility this week in the marketplace has driven dividends, and that is a huge factor in the market. If you have volatility, you're going to see big dividends. This is why you're seeing a lot of loss in the value of the funds, because the dividends are going to be extremely high, all from volatility. Number 3, Tesla. Tesla still a quiet runner. That thing is just slowly trickling away, coming out of the basement, still paying strong dividends. You can see it's almost a 20-cent increase over last week. And then AMD. Now that one still got me questioning a little bit, because AMD, it is the chip manufacturer. Everybody needs these chips. AI was a big factor for them as well, of being able to produce the chips, what's needed for that. But again, they did a great job this week. I'm not mocking them. I'm not making any comments about it. I think they're doing great. I love it. It just was a shocker that came up so high this week. So very strong. That's the top 4 from this. And we could just go down this whole list just over and over and over. Look at all of them that are up. The ones that are down, and I put a warning out there, is MSTW. That thing down to 7 cents. Last week it was 85 cents. We're gonna wait to see what the whole package turns into. So just a huge drop off on MSTW. So I'm not real. We were excited about it last week. We thought this was gonna take a turnaround, and it's just really doing the opposite of what we said. So across the board, I think we had a strong week in dividends. A little weak on the growth, strong on the dividends, but that's what we're here for, income. Let's take a look at our weekly income ETFs. And again, I love this when I see half up, half down. And almost want to tell you, up just means you're even. We first want to take a look at QDTE, 20 cents last week, 20. It's actually up because we changed the format to carrying 4 numbers over. So 20 and 30, 2036 cents versus 20. It could have been the same, but I think it's just a hundredth of a penny difference. The next one, YBTC. up a penny. YETH up, almost flat. And MAGY is, we're going to call it up because it's all rounding errors at this point. That's why I say everything is so flat across the board. So these guys are doing some very, very strong numbers across the board. Year to date, the YETH still has a nice 82% year to date yield. So this is, again, well, these things are here, guys, are the steadies. They're going to not pay you big dividends. They're going to pay you fair dividends. They're going to give you a nice yield over a 12-month period. So these are not going to be the ones that are going to be writing home saying, I'm making 100%, I'm making 90%. You're basically in that 30% category and doing very well. Not arguing these, not against these. These are solid pieces for the retirement funds. These are solid pieces for generating income in retirement. So we're pleased with these. So now we get into our comparison of the ETF, which is basically we're going to take the value of the stock to the new dividend to give you a kind of a percentage that you can dial in and say, hey, who's paying the most? We look at this, HOOW paying $22.22, the biggest dividend that's out there this week. Are they the best payer? The answer is no. COIW is with 3.61%. So I'll explain to you why and how I use this thing here. Is if we're getting 3.61% return on our money for this week off of this dividend, that makes it a very strong piece. One of the pieces that we look at all the time, and I hate to use someone else's, but it's my baseline that we use, and that is ULTY. ULTY comes in, week out, pays 9.5, basically 9.5% average. Okay, that thing comes in as a baseline about 1.63. Now, I know numbers are going to throw you off a little bit, but 1.63 is their baseline almost continuously, week in, week out. That's why everyone loves that so much. It's about a $5.50 to $6 stock, pays 9.5 cents, and you just get that 1.63 percentage almost each and every week. So that's our baseline. Anything above that baseline, you got a good comparison. How much am I gaining, more or less? So across the board, when you look at everything that we've kind of put in color, put you above the baseline. So what I'm trying to tell you is if you want income out of your ETFs, you want income out of your portfolio, this is what you need to watch for. When you got coin paying 3.61% this week, huge return. 3.19% for HOOW, huge return. You get down to PLTW, 2.30%. That's another huge return off of it. And then we get into the Tesla at 1.97 and AMD at 1.54. So what this basically tells us, guys, is that where to look. It kind of gives you a target of who to go to first. I would always say jump into HOOW because, man, $2.21 on a share. But the system comes back and says that's not the best buy. COIW is. And then adding two other pieces to it. So I always suggest people to take a look at this one very heavily. As again, this is only one part of about 5 parts you need to study before you make a big investment. And don't just take my advice. Always listen to, the warning that's out there. Ask a financial advisor what their opinion is. I just think HOOW, COIW are very, very solid. AMD as well. And the Teslas, you can go on and on and on. So our cash cow for the week, here's the award, and that goes out to COIW. Paying out that big $1.33 dividend on a $37.12 price target. That gives you a 3.16%. That means 3.61% of your fund is coming back, of your dividend or your price is coming back to you in one dividend. Very, very big number. Then now you take a look at the average over the period of time, how well coin is done, and you're going to find out coin has done a whole very, very good average, giving you a very strong return. So we get into here. Who's the big winner here? YETH, paying 1.35. So just a hair under the 1.5 mark that I normally use, or the 1.63 that we use against ULTY, but a solid $29 stock paying you 39 cents dividend at 1.35, definitely solid. But like I said, look at the rest of these. You're going to say, hey, steady, steady, steady. Now we're going to take a look at the return on investment of the weekly pays. Now, if you're not familiar with the return on investment, which I'm finding out a lot of people are actually starting to learn it and understand it, which is great. Trying to teach people how to invest differently. Return on investment is if I take an investment and put $20 into a stock, how quick can I get my $20 back from dividends? Because after I get that $20 back, I now have what I have classified as a true cash cow, which means that thing just is going to continue to pay me a dividend. I'm not focused on the value of the fund. I am focused on keep paying me my dividend for income. So the whole question is, if I put the money in, how fast can I get out of it? So the highlights here, any fund that you're dealing with weekly, it's really the target number is 1 year or less. 1 year or less, you almost have, I call it a no-brainer. It's something that you can definitely take a look at and say, yeah, probably. But you got to tie the other pieces in. How long have they been paying the dividend? How solid is that dividend? When I get into the dividend, what's the return on this? We may just have 1 week they paid a big dividend, and now we got to figure, that throws the numbers off. So there's a lot of little pieces to it that I say, if it's under 1 year, it's not just a set in stone. It's a great start that you're moving down the right path. So when we're doing all that, like the very first one we look at is COIW. Again, with that big dividend that they're paying this week, their 3-week average is 95 cents. So I'm not worried about that $1.34 that they're going to pay this week. I'm looking at 95 cents over the past 3 weeks. How does that fit into the $37 stock? That says in 39 weeks, I'm going to have my return on coin. So basically 3/4 of a year. So in 39 weeks, I'll get my $37 back just on the average of 95 cents from the dividend. After that, I'm collecting 95 cents every week for as long as I hold the fund. And that's what you're trying to find in retirement, and that's what you're trying to find in your investors, is that income package. Okay. Number 2 is HOOW. It's paying $1.62 over a 3-week average. With the $69.81, you're at 43 weeks. Now you're at 0.83 of a year. So under 1 year, just a hair over 3/4 of a year. So to me, another solid play. And that one's been playing for a very, very long time. It's always been in this category about that 1 year to 3/4 to 1 year mark, depending on the price of the fund to the dividend itself. So very, very strong long-term runner. Another big one that we talk about, MSTW. Now this one here's got me a little gun shy. It's 48 cents, but this week's dividend was only 7 cents. So these are the things I try to teach you and show you is, yes, it says 48, but why do we only get 7 cents this week? That's going to change the whole time frame on 7 cents. So we got to make sure that the fund is going to continue to pay 48 cents, and that's why I get worried on MSTW. Did it just have a bad week? Or are we having an issue with MSTR? Now, we watch all the funds. We watch the Yield Max. We watch the Rex shares, Granite shares, Defiant shares. We watch them all. MST across the board has been struggling. The only one that I've actually seen that's had any good signs to it is the ones that are now starting to sell the put options, are selling on the short. They're selling on the negative. And they've actually generated some good solid cash short. So it tells me that MSTR is on a downward slope. It's falling down. So we're waiting for it to get closer to its bottom before it kind of reevaluates itself. And let's watch the price of the shares go down, the dividends drop down, and then we'll be back up to, again, over probably closer to that 1.5 years category. So that's why when you see this thing over 1 year, hesitant. You got to put the brakes on, say, let's do some research. Netflix, 1.28, and PLTR, 1.22. So very, very respectively from both of those. But realistically, we have two of them that we keep dialing it down to that you really want to focus on. Return on investment on the weekly income, and the only one that really gives me any excitement is YTH. It's down to 1.08. Everything else you can see is 2 to 2.5 to 4 years. These are set and forgets, and you're just going to let them collect your money and move forward. For income, I always move to the other side. So now let's take a big look at the return on investments. And guys, right across the bat, HOW goes full green with it. Now, they don't have the highest year to date in yield, but they have a solid growth, giving them 198.23% total return. That is phenomenal. That is easily invest your money, get your money back, and just smile on how well that does. Coin, 163.56. These are some crazy numbers. And here's the thing, even with a 24% loss in the NAV, you still have so much yield that you can work with to keep you in the positive green. Same thing when we look at PLTY, has now it's marked red, but it's actually a green, so you're up to 128. So to me, very solid. Those are our three very solid picks right there. We get into the weekly income ETFs year to date, and same thing. They're in about the 40%ers are giving us excitement. Everything else is low numbers. So MAGY and YBTC are two of the very strong numbers and players out of that market. So Doug's pick of the week. At number 6. Normally I only do 5 guys. I had number 6 because I wanted to throw one more out there. And here's what Doug's picks are all about. These are not Doug's buys. These are Doug's picks. These are what taking out of all the things that you've seen on the screen, 20 plus ETFs. What do? You can't sit down and study 20 plus funds to try to figure out which one's the best for you. What we have tried to do is give you a roadmap to cut this down to only 6. Take a look at 6 funds this week and just see how does it fit your portfolio. Does it fit your investment requirements? Does it fit how you want to do things? And just giving you guys some ideas to help you narrow down the search. So at number 6, AMDW has a 68% total return, which is not bad. It has a 1.71 return on investment. But what I like about this, they are in the chip business, okay? This is one that I think is going to have a longer run. I think you're going to see the yield go up. I see the total return going up. And then I will say the return on investment will probably start to drop off to getting closer to that 1.5 to 1.5 years. But I just think AMDW is one to research, find out, and it could very easily fit in your portfolio because not only does it have the AI package to it, it's got chips, which is used in all the technology across the board. It's used in manufacturing. There's just so many other things with AMD. Number 5, Tesla. Still believe Tesla's got a good run on it. I still think they got some legs to get rolling. 78% total return, 1.31 on the return on investment. I'm just still a Tesla person. They've kind of scraped bottom and now they're moving back up, and I just think they're a play. Number 4, Google. Same thing. I think Google had this lawsuit. That's been done, cut and dried. I think they have the AI package that they're developing very quickly and very strong. I think this is another long-term play. 87% return, very strong. I don't like the return on investment of over 2 years, but I just think this thing here, if you guys look at it, Google is probably going to be one of those long play games that you're going to set. I don't want to say set and forget, but it's going to be basically you're going to set it and you're going to be a cash cow in 2 years. PLTW. This is one that 128% total return. It's got my eye focused. 1.22 again. Not on the return on investment. I'd like to see that a little bit shorter, but they have been consistent, paying out strong dividends. But number 2 the COIW. This is one almost a win-win situation. 163.56 total return. You're at 3/4 of a year on return on investment, which means I could set it in 36 weeks, 37 weeks, have all my money back, and a nice cash cow, doing very strong with it. It's exciting. Everything I look at this tells me everything's great, and it's down. The pricing has come down, so it's a time to buy. It's not that Bitcoin's going anywhere. It's not something wrong with the fund. It's the volatility of the market that we're looking for more volatility, and we're starting to see a little sign of it. So I think it's long term. But number one is HOOW. Guys, I have talked about this one. I've done a separate video on this one. I'll tell you straight out, I own number one, number two, number four, and number five. So I'm not doing something to try to pump up my own thing. I'm already owning it. I think HOOW has such a positive run. They are doing so much out there. They're now getting into the Europe side of it. They're getting out of the country and doing more outside of the world, and that's going to kick in. I just think Robinhood said it's got so much legs running positive for them. With 198%, it's worth, I'm going to just say it's worth a gamble. It's worth a challenge. That's a huge return, and you have a positive growth factor. And you get that thing in that, basically I call it 3/4 of a year, but it's basically 0.83 weeks, or excuse me, 0.83 of a year. So just a little over 3/4 that you got all your money back. I think that's probably between number one and number two. You can turn those two into a cash cow early in probably mid 26. You'll have cash cows, and you guys will just be pouring in the dividends. So guys, it's Doug the Retirement Guy. Tell me what you think. If you like what we're doing with the video, give us that thumbs up. If you're not part of the membership, hit that subscribe, hit that bell notification so you always get that. But let me know your comments down below. Do you like the HOOW? Do you like the coin side of it? I know there's other options out there, but from Roundhill, I think these are the two top ones that just make things go crazy. Also, don't forget, we got the Patreon thing. It's free. You guys can join it, get all the information behind the scenes. And if you become a sponsor of it, there's even more behind the scenes after that, where you can have a one-on-one with myself. So guys, we'll see you next week.